Insurance industry lobbyists warn about excessive Solvency II measures. We will learn about rebuilding costs with Andrew Thompson from the BCIS. Hello and welcome to this week's edition of News Insurances Weekly. Insurance sector lobbyists say that the proposed Solvency II rules could make the insurance industry vulnerable. Designed to protect consumers by ensuring that insurers hold reserves in proportion to the risk they underwrite, Solvency II measures in their current form are believed to be excessively conservative and prescriptive. In an open letter to the European Commissioner Michel Barnier, Europe's four major bodies argue that these rules could make the insurance industry more vulnerable to economic downturn and force companies to charge higher prices. Now, the insurance sector fully supports the Solvency II framework, but they say that they are ready to help the European Insurance and Occupational Pensions Authority to solve any of these concerns. We have met with Andrew Thompson, Director of International Development and Data for the BCIS, who helps us better understand about rebuilding costs and their relation with the insurance companies. Let's listen to Andrew Thompson.
The rebuilding cost is about actually, what's your total risk? What's your risk exposure? And that's what our surveyors are very familiar with applying the rules, so that you're actually getting good sum insured information out there. In many ways, it was harder to go back and model back to the 1720s, a long time ago, when you've got to consider how you would rebuild it, take into account modern building regulations, and there was a lot of variation in the staff, to some of the more modern housing types. But they're very expert at being able to take into account the trends, take into account the way sustainability may affect future house building. The relationship with the Association of British Insurers for more than 30 years, a very productive and useful relationship. The actual engagement is all about helping homeowners to check their sum insured, and we've got a tool that's there there's a website that homeowners can visit, put in the floor area information, and it gives them rebuilding costs. But what we learned is that the level of information and the granularity of the information is, you need much more to help the insurance look at their value at risk, so they can look at the total value at risk on their portfolio. So that's where we've added a lot of value for the insurance sector. At the same time that we engage with the insurers, we also developed what we termed our rebuilding cost lookup service. And this is a SOAP service that actually enables you to put in some data and make a call for information to our services, and we return a rebuilding cost value. And this has been implemented very widely by the insurance aggregators. So Money Supermarket, Go Compare, Compare the Market, Confused.com, and Tesco Compare, as well as some of the larger brokers, have incorporated this service within their web offerings. So as you go and get a quote for building insurance and contents together, by the time you need to input the question about what's the rebuilding cost, we pre-populated those fields with our suggestions based on the information that's being collected. The homeowner doesn't have to put in that value, but it was a factor that certainly the insurance aggregators were seeing, that customers came to this part of the questionnaire and struggled with it, and they were going elsewhere. And so it's a service that we feel is really valuable to homeowners, and it's obviously valued by the insurance aggregators themselves.
Thank you very much for your attention. I will see you for next week's edition. Goodbye.